All right, hello everyone. This is Shane with Trade ATS. Before I go ahead and get started, could I get a Y typed into the chat just to confirm that you can hear me all right? Perfect. Okay. So, yeah, just want to welcome everyone to the webinar. A little bit of housekeeping as we normally do at the beginning of these. If any of you have got any technical questions, please make sure to send those over to support at Trade ATS. We're gonna be handling stuff like that over here. We're gonna mostly be going over some markets. Wade has got a little bit something a little bit different planned today. We're just going to be looking and doing some analyzing on some different pairs. And as always, if any of you guys have got a specific pair or position that you're trying to manage, feel free to type it into the chat. We just ask you to specify the time frames that you're looking at it and try and give us a little bit of information as to exactly where you got in and out of the trade, or where you got in and where you're still managing and everything. So yeah, feel free to go ahead and type those in and we'll get to them after we kind of cover just a few of the more popular pairs that some of you guys are looking at. Anyways, all that being said, I'm going to go ahead and hand it over to Wade. Thank you.
All right, thank you, Shane. I want to welcome everyone to the webinar. Good to see you guys on this morning. We got people from all over the world on. Appreciate you guys getting up either early or being up extremely late to be on. So very much appreciated that you guys are willing to make that effort. So as Shane said, we don't have, unfortunately, I don't have a PowerPoint or any kind of amazing lesson or anything planned for you guys. Hopefully you guys did see the video we sent out though. That we put together on YouTube. So hopefully you guys have been able to watch that. I think it turned out pretty good with as far as multiple time frames go and things like that. So hopefully you guys were able to take advantage of that. So what I got planned for you today, what we're going to do, we're going to keep things pretty simple. I picked out 5 different markets and I'm basically just going to go through them and walk through analyzing them on the higher time frames down to the lower time frames and just kind of tell you what I see and just kind of go through that type of analysis and just kind of how we're looking at the market and what we expect for those pairs on the different time frames. And then through that, if you guys have questions as I'm going through that, then hopefully we can build on a conversation. Normally we like to keep these around an hour or so. So we'll just kind of see how it forms organically. Can I just get you guys, can you make sure we have one person or a couple people here that said they didn't get any audio. Can you guys just type in a Y and let me know that you could hear me? And in the meantime, I'm going to get my screen up here. So yeah, if you just type in a Y, just let me know that we're good to go. Awesome. Okay. All right. It looks like we're good to go. Okay. So the first pair I picked is everybody's favorite, the biggest, most highly traded pair in Forex is euro dollar. So I'm going to take a look. We're going to start here with the monthly and the daily. Okay, monthly is clearly long. However, we're under average price right now, under this last expansion level. One thing I do notice on the monthly is that we're rotating off this previous level. So if you're trading this with a monthly outlook, what I'd look at is definitely we're in an uptrend for sure immediately. We extended pretty far down from this last average price here. So I think there's a good chance, there's a good chance if you were gonna take a big trade on this and sit in this for possibly the next year, maybe 2 years, just depending on how long it takes. There's a good opportunity to sit in euro dollar with the stop loss right here, because the way that it came down and held this average price right here, that's a clue that we could be holding a new uptrend starting this way. We're starting to stack expansion lines long. So that's, this is obviously a very long-term position, but if I was going to hold the euro, that would be the opportunity because you can manage your risk below this stop level right here. And obviously the reward upside would be, at least to right here for a full mean reversion back to that average price and then beyond. So that would be the monthly outlook. But like I said, probably not very many people on this webinar are going to be staying in a trade that long. But anyway, that's what it is. So that leads us to the daily. As you can see, the monthly is clearly green. So if we're swing trading within the monthly direction, then here you go. You have your this was the first run that put us up into the green on the monthly. Came down below average price right here, held right here. Again, kind of the same thing you see right here. See how it's coming down, holding above average price. Same thing right here. We had a counter trend breakout, held above, and then we're starting to run long. So you guys can see that. Now, let's go down to more relevant time frames that you guys are mostly probably trading on. Now that we know that the monthly is clearly green, that is the direction of the month. Right now, you can see that was reflected. We had these days, see how the down days right here, the red days to the downside were more insignificant, and the up days were much better for trends. So that's how you kind of form a bias when you're trading, even on a day by day basis. You can look to that monthly chart on whatever you're trading to figure out what's the direction of the month, and you can look on the weekly chart as well, make sure they're in alignment. And then those days that are in alignment with that monthly and weekly direction, you're going to want to pay more attention to those days rather than days like this, these red days that are out of that direction, if that makes sense. So it acts as somewhat of a filter. So let's change this to a daily. Okay, and then now let's change this to we'll change it to an hour. Okay, so now what's this tell us here? So this is going to be much more relevant to the session today, which basically is just ending right now. So we have a green daily. We're below average price. Okay, so this could be immediately. We could be going we could be taking a breath on that monthly trend because we haven't popped through this average price and it's starting to hold. Now we're still long because we're still green on the daily candle. However, we're at a point of indecision here, which is going to be reflected in this whipping movement that we have on the hour. Okay, but if you had to make a trade, the monthly is still long. There is a good chance we're holding this right now, but we could definitely pop up through here. So if I see on the 1 hour, there actually is a trade right now. Right now, if you look at this, we're holding green. As long as we hold green on that, right here, you can see we're holding above this average price right here. So that shows you can see those wicks came down and touched that level barely right there. So that means that you can control risk. If you did want to rip a long trade right here, you can control risk right here in this zone. And then the expectation would be the immediate trade would be from here to right here. This is your point of reference for the trend. Let's measure it out. Right now it's 238 points or 23.8 pips. Not huge, but it is something. And that's the thing with the euro dollar is it just doesn't swing like it used to pip wise, but that is the opportunity if you wanted to take it. Hopefully you guys can see how that's forming. And then finally, we're going to go to the real short term. And I know some of you guys trade a 15 and a 4 hour. You can also trade the 5 into the hour. You got to find what's comfortable to you. Sometimes the 5 minutes a little bit too fast for people. So you just got to find out what works. But I'm going to go ahead and I'm going to switch this to an hour now. And we're going to figure out what happened right now in this immediate down move. Okay, so what's going on here? So we had immediately, if you're only looking at these two time frames, obviously we went short on this candle. We broke short. We got below average price right here. This line wasn't here until we got to this level, but you did get below this average price here. So there was a possible entry. I wasn't watching this as it went, but possibly you could have ripped the turn right here. You're below average price here. This is getting in trades on the actual pullback when you don't have you're this far away from the white line. You can get in on the rotation right here. You can sell that in line with the hour if you feel confident about it. But in these situations, I would control your risk real tight. Like if you sold this, I would have your stop loss, no more than a little bit above this high, maybe even tighter. Because with these things, what you're expecting is you're expecting that it's going to go into the money immediately. I mean, it's a short-term momentum trade. So, like I said, if you open the sell position right here on the turn, you're expecting it to basically do what it did and get right into it. So you can do that, but in this situation, you wouldn't want to wait till it came all the way back up to here to get out. You'd want to control it real tight. So now that we're still red, right? We're still going down. This would be in the basic strategy. You have an entry right here where the 5 minute we have this counter trend breakout out of the box and then sell coming back through expansion. So there's a trade right there. However, this is what I talk about. You want to put the whole puzzle piece together. You want to or put the whole puzzle together. This one did pay you right here. If you would have got in on the turn or got in right here, because the hour is short, if you're using that, it's red. It's below average price over here, below expansion. So you could definitely, that puts you into the money. It came down, it held, and then it came down and it swam down here. So it puts you into the money. However, what's transpiring right now, you can see it broke out long, held average price right here. That's a clue that we can be in a rotation, that we could be turning. So at this point, if you were in that trade, that's it. This smells like a reversal. If you put the pieces together, yes, it did put you in the money. It had a chance to really go right here. It turned up, and now this is definitely your clue that you don't want to be in this trade short right now at the moment, in my opinion. But also think about if you did your analysis from starting from the monthly down, this move technically is against the overall trend, right? And we talked about that this is a possible entry, right? So if you know that and you're kind of reversing, if you're excuse me, my throat's a little scratchy. If you're reverse engineering your way even into these smaller time frame trades, you know that overall, what should your expectation be of this move? Should you be getting in a trade right here and just hanging it out and thinking like this is just going to run and go nuts? So I apologize if you guys hear some construction. They got construction here at my house going on. So apologize if you hear a saw going or whatever outside. So anyway, so going back to what I was saying, if you're getting this, you're going to short this opportunity right here. What kind of expectation are you going to have? Because a lot of you guys will send us screenshots, and you would have taken this trade, which there's nothing wrong with this trade. But what I'm trying to bring home right now is the expectation, understanding this is a counter trend move. This is an entry itself into the bigger trend or a possible entry. So knowing that, you can enter this trade, but the minute this thing doesn't want to go for you, you got to be ready to dump it because it's not in line with the overall monthly, weekly. There's the chances of this turning into a big runner are pretty slim unless it's a major reversal. And in that point, the monthly, the weekly trends are all gonna rotate around. So anyway, hopefully you guys understand where I'm going with that. That's good enough for the euro dollar.
Oh, hey Wade,
Next,
real quick, I just wanted to make a point about some of the things that you brought up. So one thing I wanted to bring up was on the hour when you see it come down. This is a behavior that tends to happen on pretty much every pair, but when price moves away from any given box and there's a bunch of expansion lines, formed, or as we've got in this case on the euro dollar, the one that's coming out of the box, and then like two candles later we have another expansion line. It runs up, takes out that red liquidity line at the high, and then it comes back down. When it gets back into the range of those two expansion lines, that's where the breath happens that allowed you, which was probably the better entry to get into that going short. And I just wanted to kind of make a point that you're going to see stuff like that constantly, where it's going to hit those average price lines, and just keeping in mind what those mean, that they represent orders. We don't know if they're buys or sells, at the time. But, once the architecture starts to develop a little bit, then you can kind of get some more clues into it. So anyways, it pushed up, took out the liquidity, then it came down, hit that line, and you're going to see that over and over and over where it moves away and then comes back to these expansion lines, and you can almost always expect a reaction. So one of two things will happen. It'll normally take a breath that allows you to get in, or it'll end up being a reversal, which is a little bit of what we've got going on right now with the low interacting with that past average price line, if that is going to put us back into trend. I had that, and then yeah, the second point was just that it's hitting that lower average price line, and we're getting a little bit of a bounce off that, which could potentially put us back in line with the larger time frames.
Yep. So I mean, it's what Shane's saying. You definitely got clues coming in here, and that's the biggest thing that you guys, when you stick your entry, you guys have to watch the clues as it plays out. We don't know the future. All we can do is figure out where's the trend potentially headed on the time scale we're trading. If you're looking for these smash and grab trades in session, the 5 into the hour is a good pairing. There was a possible trade right here, but the expectation, we don't control the market. We can't make it run another 50 pips. It's going to do what it's going to do, and we have to be able to make the call quickly and just call it what it is. So anyway, I think we got into that one good enough. I'm going to go ahead. I'm going to jump into dollar CAD next, and we're going to do the same thing.
Yeah, actually, just to add on to my point, so when you've got to trade, sometimes I'll see emails come in on support, and it's like there's conflicting signals for everything. It's like, well, the monthly is long, but the daily is short, but the 4 hour is long, and how am I supposed to make long or short of it? And it's mostly just expectation on how far the run is going to push. I mean, you can pick up a good trade in pretty much any direction depending on the time frame, but you just have to have the right expectation of whether it's really going to run or not, and being reasonable in that regard.
Absolutely. So, okay, so looking at dollar CAD right here, we're going to do the same thing. Okay, what's the monthly say? Very clear right there. Short, and we're short in momentum. We're below average price. Had a clue here how it held. A lot of questions I get asked are people say, well, how do you know when it's settling? Going back to the master pattern video. How do you know? You know when it settles. When you have action like this, that has clearly happened, it's clearly settled. Is it always going to be like this? No, it's not always going to be like this. But if you're someone where you're like, I want to be really, really, really sure of the trend, well, then you can wait until you have a situation where it tests the line like this, and then you know for sure that you're good to go on that direction. So again, if it's not in your criteria where you understand it, just stay away from it. So anyway, so the monthly's clearly short. Right now, the daily obviously short. It's pretty extended. So, I would say that there's a good chance that we are headed into a box here pretty soon. Just because it's a pretty big expansion that we've had out of here. I don't know for sure. I would for sure be short, but I would not be surprised if we don't get some pretty whippy movement. And just kind of stay in this range for a little bit. But anyway, so that you're clearly short. I don't see a great entry on the daily or anything. I would definitely wait if you're going to trade a swing trade into the monthly. I wait for some new architecture down in this range. But that being said, let me change this to the daily here. Okay. Let me see here. So change that to the daily, and then we're going to change this to the 1 hour. I apologize for the saw. If you guys hear that saw going, they're kind of going nuts out there. Okay. Hopefully they're done with what they're doing here in a second. Okay, so the daily is short. So now let's figure out what's going on. So this is, you see these ranged out candles. You got wicks out the top, out the bottom. We're kind of navigating what could possibly be a turn on the daily, falling in line with the fundamental direction. However, this is pretty whippy. So let's say if I had to do something right here, this would possibly be a short falling in line with the daily, but I don't really know if I like it too much. Let's just put it this way. If you were going to short it, you would have done it right here on this liquidity line. It would have came down. It held average price right here. So from that standpoint, I would be dumping this trade because it looks like there's a good chance it's going back up to this level because it held right here. It had a chance to get down through that, and it didn't. So that's a clue. Because I could see this chop. I can see it reflecting the price action right here. I'd be sitting out of this on this time scale at least. Okay. So yeah, nothing great here. Now let's turn this into a 1 hour right here. Okay, let's turn this into a 5 minute. Okay, so now this is much more interesting. Although we are getting out of session, this is dollar CAD. So I mean, I don't know if there's much is gonna happen on this right at the moment, but now you see if we're looking at the 5 in the hour, now there starts to be, what could be an opportunity as the hour is rotating off of average price on this time scale. Yeah, I mean there could possibly be some setups happening, and you're early to the party. Now, based on the daily being ranged out, I wouldn't have a huge expectation, but there's a possibility that this 1 hour could run up to here. Just like I said, the reason why if I was trading the hour into the daily, I would be dumping the short position. Well, that trade and what I think could be breathing out here could equal opportunity on your 5 into your hour running up. What's the price here? So this is 1.30680, which is 1.306. It's about right here. So, there's a possibility. I wouldn't trade it right now. Obviously, there's no trade right now. You'd need it to breathe back down around these expansion levels right here. It's too far gone. So you don't want to jump. You don't want to chase a trade like this. But there's a possibility it could be going long right now. But is there a trade right now? Absolutely not. So anyway, and I wouldn't be, like I said, I wouldn't be trading this one just because we're getting out of session right now. And there's a good chance it'll probably end up going flat. So anyway, see how it develops over the next day or so. Okay, next one I'm going to take a look at is pound Aussie. Here it is. Okay. All right. Okay, so pound Aussie's clearly long on the monthly. One thing I'm looking at is that we are getting a reaction here at this previous expansion level. So which is reflected. That's why we're kind of going sideways right now on the monthly. But for all purposes, that candle's green. We're going to call it long. Okay, let's take a look at the daily. Okay, this is interesting right here. Came down, held this average price right here, had a push up, held this one again right here. Okay, if someone told me you had to put in a trade right now, I would definitely be long. The expectation would be that we're going to come up through this average price. I would control my risk right here. Since we held this average price, we had this liquidity line pop, I would go long in this candle right here. Stop loss would go right here. If it rotates, it's coming back down through this expansion level, this previous expansion level, and this candle's probably turning red. So right there, it's got to act in this range, and it's got to keep making progression upward. Again, this is on the daily time scale. This trade just to get up through here could probably take 2-3 weeks, possibly, maybe faster. But you got to think of how many daily candles. What does that architecture look like by the time you get to your initial target, which would be right here? So that's something you got to take into consideration. But hopefully you guys see we held that average price, held it here. So you're starting to stack architecture in that trend going long, and you can control your risk at those levels. It's giving you the levels and we're going to work with what the market gives. So anyway, let's change this to a daily now. Change this to a 1 hour. Okay, now on this time scale, no trade right now. Because if you start with the monthly, you understand that the monthly is potentially long. Now this is we're in the very first candle that's green. However, I wouldn't look for a short-term opportunity until we get up through here. And obviously this 1 hour is completely extended. So what I would do is I would wait. If you're going to trade the 1 hour swing, I would wait till we either breathe back down into this level right here so you can manage your risk off of these expansion lines, or I'd wait till we get a new box, we get some new architecture, and then manage your risk within that new expansion range, which will, it can definitely happen here. So anyway, if you're looking to enter on the 1 hour, I would wait. If you're, like I said, if you're going to enter on the daily and you're going to control your risk down here, then that's fine. You could just get in right now because you're looking down into this level down here to control your risk. And you're obviously looking for a much bigger reward. If you're going to enter on the 1 hour, you'd probably be looking to just get up through this expansion level right here, take a quick swing profit out of the market and be done with it. So anyway, like I said, it just depends on what you're trying to do on those time scales.
And also keeping in mind that it just hit that daily average price. So going back to what we were talking about before, it's probably going to have a reaction, go through a little bit of a breath, and then you can really see, give it a little bit of time to develop based off what it does on that average price line.
Yeah, absolutely. We're definitely, on that time scale, you got to look at, you guys are going to control your risk by the previous expansion levels. That's where you're going to control that's the best place to do it. And if you're too far away, if you're too overextended, then there's no trade. And like I said, it also depends on what you're trying to do. If you're going to rip a long trade on this daily candle, you're not going to probably do it at the same lot size that you would trade a swing on the 1 hour. You can trade a heavier lot size because you're looking to take a quicker profit. So on a percentage wise, yeah, you could just go long right here. But you need to, the expectation is, this thing could go, that's 100 and, from where we are right now, that's a 200 pip move possibly against you for controlling risk. So you would want to adjust your lot size in an appropriate way because again, it's kind of going back, nothing new that we would say, but you don't want to risk more than 1% of your account or so per trade. So you need to take into consideration the time frame expectation of what you're looking to have play out. And also the risk associated with that, and trade accordingly. Okay, so anyway, so that's what we got there. Let's change this to a 1 hour. And we're gonna put this to a 5. Okay, 5's a little more interesting. However, like I said, that we're getting out of session right now. So let's take a look at this. Okay, what do we see? We had this big explosion. This is kind of that initial move that starts, this is starting that rotation on the 1 hour. On the daily. If that daily is going to hold and it's in a stack, don't feel like when you see these big breakout legs, don't feel like you're missing the boat. Because in reality, if that's in a hold, if it's in a turn into a significant trend, you always get these big breakout moves that most of us will always miss. Unless you're sitting in the trade baking on a longer time frame, you're typically going to miss that first move. So just don't worry about it. Now, if you bought right here, let's say you took a buy right here. This is that you would have got the grade A signal. Like if you're running the 5 into the 1 hour, you would have got a grade A signal right here. Now, how would you feel about this? And this is where we talk about, do you want to just blindly take the signals? No, it's going to tell you it's in criteria because we have a counter trend breakout out of the box. If you're running in, this is probably this is a grade A. It's the first opportunity. But let's take into consideration what time of day is it? Okay, we're out of session. So the chances of this going, and continuing this run, not great because volume's going to die off. Number two, it's already overextended. So would this be something that you say, oh, it's a grade A opportunity signal, I just need to jump in, I need to take it, I need to go all in? No, because when you weigh out the things that are in your favor and not in your favor, there's not enough in your favor to take an opportunity like this. Also too, if you did buy this, see how it's holding below average price? That's your clue. Even if you did, maybe you went up a few pips if you caught it right here, or you're just kind of break even. The fact that we didn't make that progress through there, I would not be going negative much past the previous low right here. So right here, it better range out and make progress up there, but you're controlling that risk real tight. Sometimes people will enter and they'll just let an opportunity like this run against them and just go and go and go and go. And they try to figure out, what did I do wrong? Well, hopefully you guys understand, out of session, moves already way overextended. And on top of that, if you absolutely did trade it, you're getting that clue that it's holding below there. So, there's not a lot in your favor on a trade like this. And so, whether it's pound Aussie or another currency or whatever you're trading, this all applies. You got to kind of go down through the checklist of, how many things do I have in my favor before I even look at taking an opportunity? And you got to kind of reverse engineer off of that. So anyway, hopefully you guys, wasn't a lot of opportunity, regardless in pound Aussie. This is just that initial move, and it's already too far gone. But possibly if this holds, the pound Aussie could possibly look really good tomorrow, and then coming into next week, especially if that daily holds long. So I would definitely keep your eye on it. It wasn't a great winner today, but possibly over the next 5-6 trading days could turn into something. Okay, the next one I got on the list is, we'll look at dollar yen real quick here. If I could find it, it'd be nice. Am I not seeing my screen right or something? I know I'm probably looking right at it. Here it is. There's all these letters and everything blend together over here. Okay. All right, monthly. Start with the daily. Okay, we're gonna go through this one quickly. USD on the dollar yen on the monthly, clearly long, breaking through this level right here. So that's definitely a good sign. We're getting into the momentum criteria on the monthly. No trade on the daily as of right now. If you're going to take a trade right now, if you just went long, you'd have to control your risk. Well, let's just put it this way: you wouldn't want it to breathe back below this level. You'd want it to hold above that, and ultimately down here, you'd definitely want to get out. So obviously, you could measure from those levels. Definitely not worth jumping in right this second. However, if that monthly holds, there will be some opportunity. The monthly has been green, so if you did want to trade against, which you can do this. As long as the candle's green, you can start trading again, even against expansion, because it's such a huge, significant time frame. There was an opportunity right here as it dropped back, because you got these green candles coming up. So you could have bought as we broke out, could have built a position. We came down, could have came in here, came in at these liquidity line levels. Also, too, as you see, as this breathed down, you got to look at these previous expansion levels. It looks like it was coming down to here. So ultimately, if you did build a position in that monthly direction coming down through here, if we got much past right here, this is the level it ultimately ended up holding. As you got this reaction long right here, I definitely wouldn't have let it go down below this if you did trade this long and come get this take this opportunity right here. Wouldn't have because that was the last one it held. So yeah, I would have controlled your ultimate risk on this type of trade from right here, because that's the level it ended up setting. So But anyway, no trade right now. Let's go to the daily here. Okay, obviously the daily's long, had some decent opportunities it looked like on the 1 hour. So let's take a look here. Okay, so when did this happen? Nothing right here, because this was obviously, that was that initial move, just like with pound Aussie. On this time scale, he had the 1 hour it ran there, didn't really give a great opportunity. I mean, you could have maybe taken some of these momentum turns, but again, you know, when you're trading these rotations like this in trend, with the higher time frame with the daily, you're looking for those to rotate and take off just as they did. So if you're going to trade these rotations, make sure you control your risk real tight on those. But we got a little more architecture right here. And so this, I see a possible entry opportunity right here. This was the first one. This one didn't really get below, but see, it came and breathed back down. Then we came down, we had a counter trend expansion right here, took out a liquidity line, and then had a reaction. That looked good right there. So let's see, that was on January 10th. So let's find January 10th was right here. Okay, so we're clearly green at this point. We're clearly going long. So there's the color direction on that, very clear. So you'd only be looking for a long trade for sure. The fact that we got a rotation here, it did hold below this average price right here. So this possibly in the moment could have thrown you off a little bit because that could be a reversal. But this is what I say. When you get this, it's a clue, but it doesn't mean it's definite. It doesn't mean it has to reverse. So if let's say you bought right here, it came up, it held right here, you would still be controlling your risk right here below this low. If you bought right here, remember this didn't happen yet. So right here, you would have maybe bought right here. It would have breathed against you a little bit, but it didn't go back below this low, ended up forming a new box, and then we did get the breakout. So again, you would have been controlling your risk right below there, and you shouldn't have got stopped out on that one. You should have still got paid. If you did get stopped out, then you would have given it some room. See if it didn't start, making a run short. If it didn't, I would have got back in on that, and then sure enough, you ended up getting paid on that one. So anyway, there's that opportunity there. Had some opportunities here. It came down below, just mean reversions back to average price, pretty whippy. This one, the fact that this one pushed down, came back, you probably would have taken a few pips on that, but the fact that this didn't make progress, you had another one right here when it whipped down, I probably would have left this one alone personally because of the way this one acted back here. So I probably would have given this a little bit more room here. Now, this is interesting right here. We're still clearly green on the daily, right? So as you broke out short right here, this is another opportunity. So you could have got back in long right here. But again, this still, at this point, this is starting to feel like a downtrend. Now, this is another thing that you guys can do on situations like this, is the fact that in the moment, this is looking like a downtrend. I probably wouldn't say that you should have gone long right here, but I would have given it some time. But the fact that it went long and then see how it came down and held right here, that is a clue that we could be falling back in trend. And then we know that the trend on the daily is long. So you could have actually bought right here on this candle and then controlled your risk right here, right below this expansion level. That would have been a good opportunity. Yeah, you may have got in and out. Realistically, you may have tried a few more trades, but as long as you stayed trend, let's put it this way, you should have never been short through any of this. And as long as you stayed long, even if you did get a little scared, maybe you did take a loss on this, maybe you got freaked out, even though it didn't go below the low here, you should have been able to get back in, and in these situations, you should have made way more than you would have lost, even though it was a little bit whippy. This is a difficult market right here. It's pretty, there's a lot going on there as far as how wicky the candles are. So, but if you are trading that, you're definitely only long. Okay, let's take a look at the hour. Okay, hour in the 5 here. Okay, so where's the opportunity? The opportunity of the day was definitely right here. Had this breakout right here. Everybody jumps in long. You guys aren't going to chase it because you guys know better. You're going to come down. You're going to wait till we get down below that average price. Boom, we take out liquidity. It held this previous level. So you could have bought long. You probably would end up, realistically, this happened fast. You probably would end up getting in at this turn right here and controlling risk at this level and this level. That's the levels the market set. That's what it is. If you didn't get in on the wick down here, and it's up here, understand that you still got risk down to possibly this level. So the farther it gets away as it rotates, you got, again, those are the levels the market set. If you get too far away from them, either lot down and don't trade as big of a lot size, or just don't take it. If your timing's off, then it's off, and there's nothing you can do about it. But that was really the opportunity of the day. Hopefully you guys can see that's pretty clear. We're green on the hour. This may have flashed red right here, this candle, as it whipped down right there. If it does, remember, I mean, it's still a 1 hour chart. It's still a pretty short time frame. In these situations, it may flash red. Depending on, you want to compare that. You don't want to let, just because a candle flashes red, you don't want to let that discourage you from a possible trade, because some of the greatest opportunities will quickly flash red on your higher time frame. That's where you're going to have to, you have to compare the two time frames together, and you need to look at this architecture right here. Because this, remember that the 5 minute is the inner workings of these 1 hour candles. And that's why this wick came down here and it held. The reason why that candle stopped right there is because you have the architecture on the lower time frame, the 5 minute, it's holding right here. You have that significant level. So just because that's turning red, you can look at that 5 minute candle and understand that if we get back through here, and if you would have got a significant move down through this level right here after it held, then this is probably that red is more than just a quick flash on the hour. Like I said, I don't even know if this happened. I wasn't watching dollar yen, but if you are in a situation and you do get that flash red, understand it's like how far does it have to get through these levels for that to look like it's going to stick red? And then if that does stick red, then your supporting time frame is changing on you. But use the architecture on the lower time frames to work out what that future of that higher time frame is going to be. Now, right now, you're definitely still long. However, what happened right here? This was another opportunity. What did it do? It came up, it held below average price. Again, those are those clues. So let's say you did buy in there. Let me size this up a little bit. Let's say you did buy right here, or you bought on the rotation. Where would you control your risk? Personally, I would go to right here to this low. You'd be getting stopped out on that trade, taking a small loss, but this could be a reversal. You see that the small candle on the 1 hour could be turning red. So this one you'd want to give time, see if it breathes out, see if it gets back down to this level, then see what the hour looks like. Trend could definitely be over for the moment. So anyway, that would be a possible opportunity. You should have got paid on this one. Came through the average price, should have paid you up in this range. If you got back in, small loss right here, done for the day. Okay, last one I got for you is gold. Okay. Okay, monthly direction. What direction should we be looking at on the monthly time scale? I'm gonna let you guys answer that. You tell me, long or short. Just type in long or short. What direction is that going?
Short.
Thank you, Shane. That was very intelligent of you. All right, guys. Yes, definitely going short. Just kidding. No, it's going long. Okay, so we're definitely long on the monthly. That's clear as day to see. Now on the daily, is there an entry on the daily? You guys can type in yes, no. And this one this is a little more of a trick question. So is there an entry on the daily? Yes or no? Just type in yes, type in no. Okay, so we're getting yeses and nos, and this is good. So there is, if you are gonna trade, obviously this monthly is showing some serious momentum. Okay, so if you are gonna look for a trade on the long side, here's how I would do it. This would be one of those momentum turns that it's going in direction with the monthly. You would buy right now, and you would set your stop literally like right here. And there's a good chance you could get stopped out on that. But again, when you're looking for this thing to trade, you're looking for it to go, it has to go immediately. If you're going to go into a box and get more architecture, then it's going to do what it's going to do. But so there is an entry on that with that possibility. However, tight risk on that type of situation. Okay, and there's a good chance you could get stopped out. But if you don't, it'll probably put you into the money. It'll probably break this high right here, and you'll be glad you're in. But you don't want to go in right now. You don't want to buy this right here because it's going in line with a monthly and stick your stop down here. Or if this rotates red, you don't want to have this in a situation where it's just coming all the way back. You could get a full mean reversion back to here. It could happen. Anything could happen. So that's a situation you want to control your risk real tight. If you're going to enter on that situation. Otherwise, it's going to need more architecture if you want an expansion level to work within up here. So awesome. Okay, so let's switch this over to a daily. Okay, so we got the daily, and let's get the 1 hour. Okay, so this is a little more interesting. Possible long opportunity right now, and this again goes with that. If you're gonna, remember I said, if you're gonna buy right now, daily into the monthly, you're expecting it to go, meaning like it better it better keep trending like tomorrow and into Sunday, Monday of next week when markets open. It better stay green, right? If you are gonna buy, where are we gonna control our risk? Right here, if I was gonna buy, looking at this, you'd be getting in right now at this level right here. And I'm not going below here. I'm well prepared to get stopped out below this low, okay? And if I do get stopped out, doesn't mean that I wouldn't keep trying to possibly trade it, but there's a good chance we'd be going down to this level right here. And I may re-enter. I may get stopped out here and then re-enter down here if I still feel good about it. Now, if that turns red on that daily candle, then I'm probably not going to get back in. So hopefully that makes sense. So let's switch this over to a 1 hour. Okay, so now these are the trades of the day. There was some trades here. Broke out of the box, came up, held average price. That was symbolized right here. So you had a possible opportunity here, quick smash and grab. This one was difficult, but honestly, by the time that rotated on you, probably didn't make much on this trade. Would have got in probably on the rotation right here. Realistically, probably got it on the rotation upward. Not a high earning trade. Got back in right here, took out liquidity. You can see that we're stacking below here. This liquidity line, if you would have sold this, would have controlled risk up around this level. So from here to here, trade a lot size accordingly. Your expectation on this trade would again to be breaking this low down here and then getting through the expansion level that was formed right here at that point. which it did in fact fulfill. You're clearly short on the hour, so you would have not been long at all today. You're still not long if you're trading on this time scale. All short opportunities. So that was probably the trade of the day, was this one right here. This one was one you probably would have got in, maybe made a little, maybe didn't, probably a break even. This was the trade. From here, down here, cover either at this liquidity line, or if you really wanted to hang it out there, could have covered at this liquidity line. That was it. Now, possible another entry right here that you could have entered. It came down, didn't go below average price. At this point, I'd be protecting yourself right above this high. This one you're probably getting stopped out on right here. So from here to here, or from the rotation to right here, loss. Okay, as we formed right here, we're still above this average price. We're still short on the hour. So you could have sold this breakout right here because we're only short. We're just trying to find the high of the move. So you could have sold the breakout. If you did sell this, your immediate profit target, we're basically there right now. So from here down to here, I don't know if we're going to make it through there. It's starting to turn green. But when you did sell this, I would have controlled your risk on this expansion. So you would have expected it may have broke short. In this one, it just went, but it would have came up. There's a possibility it could come up, test the expansion here, and then rotate short again. But if you did sell the breakout, don't let it go much above the expansion. So that would be your worst case scenario. Sell here, get out up here if it didn't go for you. But again, it did work out. You're in the money on this trade. We're coming out of session right now, so I'd be looking to just get out. I probably would have covered at this level right here, just because there's chances of it turning into anything significant, not great. But anyway, only short. So paid here, loss here, or actually a break even here on this one, big payday on this one, loss here, another payday on this one, all short, no long on this time scale. You should be done right now. No more trades for today on gold. Okay, so you guys have a few comments here. Let me read through a few things for one moment. We're going to wrap it up here pretty quick, about 5 minutes. I'm just going to see if there's anything that I think everyone could benefit from, any questions or comments, and then we'll probably wrap it up. So hang on real quick. Okay, we got a request. I'm gonna look at Euro Franc. Hold on real quick. Let me pull that up. 4 hour and 5 minute. That's a little bit far apart, but you could do it. Okay, 4 hour definitely short. However, pretty extended. We had one leg down, held down here. This was really the better leg. This one, I'm not saying don't trade it, but again, we're coming out of session too, so you got to be careful with that. The opportunities here, probably the only opportunity today was this breakout long right here. It looks like it's holding this level right here. So the range is kind of from this low right here to this high. So right there is kind of your initial, I mean, that would have been the risk factor. Again, even with this spike right here, it came up, held below that level. So, but this one would have been hard to catch. This thing, it ripped back so fast that you would have to get it right here. And at that point, you can see it set the level. And so you may not have wanted to risk from here to up, past this high, which, from back there. So I'm going to say that wasn't that great of a trade. This one broke out long right here. Possibly you would have entered short right here, but look at this previous level. It had the reaction right there, but the fact that it kept charging up probably would have dumped this one, at least at this active high. So I would have called this a little bit of a loss right here. But the fact that we came up and held this again above this high, took out liquidity at the same level, and then we had a rotation. This was a good trade possibly right here to get back in, because now you can see we have a reaction. It's showing that this level is significant. we had a slower rotation, so you could have entered short right here and controlled your risk again above this high, and then taken this back down, got down to, this would have been your initial profit target right here. It came down, we had a little reaction, and then we broke through, and then you would have covered somewhere down here, probably on this rotation. So you're talking about an opportunity from here to about here, 16.4 pips, not great, but it's something. Another opportunity to get in right here. If you would have sold this rotation, your risk would have been from here to about here, or as it rotated, you could have got out above the active high here. We did get below, and now see how we're holding below. That's good. So you would actually still be in this trade if you're thinking that the 4 hour is going to break. Again, we're late in session, so I wouldn't have too high hopes here. But it is holding you in the trade. You would have entered here on the rotation, got below. Great sign that it's holding below. That's showing that we're making progress to the downside. And now we're looking to take out this liquidity here and here for profit, and then covering down in that neighborhood. Okay. So I've got a few more comments here. I'm going to take probably one or two more here. Hang on real quick. Let me just read. Give me 1 sec. Okay, so here's a comment about, it says using the market cycle system. Can you please show us an example of the payout phase, long and short, any pair is okay. Okay, so I know a lot of you guys, you look at the master pattern video. I know a lot of people have seen that video now. I think it's at like 500,000 views. And you're looking for that idealized situation of it swinging back and forth and then going into the profit cycle. What we do by combining with multiple time frames is that we're biased to one side of that pattern. Okay, so anything that expands, if your trend on your higher time frame is short, then you're only going to play the short side of the market. And so when it expands on your lower time frame, if your higher time frame is short and it expands long, you're expecting that that's 1/2 of what's going to whip back down and form that pattern. But if you guys want to look for it, you can see it, and you just have to go back in history and figure out where the point of reference is. So in a situation, in a trending market, you're not going to get it because it's going to predominantly be going on the short side. But let's see here. Okay, so I see it form right here. So right here, you had a breakout, came down. This would be the point of reference, or actually, this was more of a starting point here. So here it is, breakdown short, breakout long, breakout short, breakout long, and then there's your payout. But again, if you're only looking at this, that can get confusing. So even if you're going to use the 5-minute in this situation, you always need a higher time frame to back you up, because if you're just looking for to call the highs and lows and trade that back and forth, and you're looking for that payout cycle, you can do that, but it's much more difficult. Whereas if you were just looking at, even if you're looking at the direction of the day, trading the 5-minute into the day, if you're looking for the bigger pattern, again, find a stable time frame. And in this situation, yeah, it did play back and forth. You have the move down, move up, move down, move up, and then your profit taking phase right here, right? But the fact that the whole entire reason why we use a higher time frame is so that we can have a bias to one side of the market. So if you're going to find that pattern, you're going to stay away from the long side. Like right here, when it goes up, you're going to short it. You're going to leave this alone. You're going to short it again because your expectation is that all of these expansions will lead to the trend phase being down, because this is giving you that inside information. So anyway, you can look back and see it, but we're never going to know it perfectly in the moment. So if you're just trying to look at one chart and trade it back and forth, you're going to have a hard time. Let the higher time frames give you the insider information. I mean, Trading multiple time frame analysis using a higher time frame, that's the closest thing you can get to insider trading. Like, look at this. How many days in a row you're below expansion? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days you only had to sell the market. You guys understand that? 13 days. You knew that back here. You knew it when we held below average price up here. You had one green day, but you know that the probability is momentum is to the downside. What's the monthly look like? Short. Short here, short under average price. Do you guys see this? You get multiple time frame alignment. Let it align because that puts all the probability in your guys' favor. Don't ignore it. And if it's unclear, don't trade. But if you guys look at the power of that and you look at how the architecture forms on your lower time frames, I don't know what else to tell you. Does this happen all the time? No, but if you stick with a pair and you stick with things long enough, and that's why I say don't jump around too much on too many different pairs, you'll be there for the boxes, but you will be there for the expansions and the trending phase. And when things line up, especially like the daily into the monthly, you just got to stay short. Don't get caught. Like in this situation, don't get caught on the long side. Stay short. You're short. You're short. You're short. You're short over and over and over and over again until you lose. But how many short trades paid you? It's just that's you gotta stick with that directional bias. So anyway, guys, I'm gonna call it right now. Sorry, my throat's getting a little scratchy here. Hopefully, you guys got some value from this. Hopefully, there's some little nuggets in here that you guys can take. And obviously, I tried to spend a lot of time on controlling risk. Excuse me, because I know that's one of the biggest questions we get is how do I control risk? The market will tell you where to control risk at. Use those white lines. That's what they're there for. That's why they're sensitive. If the entry that you're looking at in your directional bias is too far away from a reference point from a previous expansion line, then don't take it. Wait till things are in your favor. Use a directional bias and stick to it. All right, guys. Everyone have a great day, and we will see you guys on the webinar next week.